The AI markets, and as an extension, the semiconductor companies have been on an absolute tear during the first half of 2024. NVIDIA is up 150%. Taiwan Semi is up 70%. And the VanEck Semiconductor ETF SMH is up 50% in 6 months. The question is, will it continue? Or is the market already signaling these red-hot AI-related plays are about to take a much-needed summer break? With us again here today to share his insights in a new trading idea is our very own certified market technician and editor of the Trading Desk, Greg Guenthner.
Well, I don't think it will. And I want to clarify that before I really get into things here by saying I'm not bearish NVIDIA. I'm not bearish AI. I'm not bearish semiconductors at all. I just think the trade has gotten a little too hot here. We have NVIDIA that's up 150% year to date as of today after pulling back a little bit from its highs. I think this is the perfect time. Summer is here. There aren't as many speculators jumping into the market. Everybody's at the beach. I think this is a great time for this stock to chop along sideways or retest some lower levels. We just had that big stock split that everybody was very excited about. It happened just a few weeks ago, and I don't think it's any coincidence that the stock continued to gap up immediately after that split, and now we get one of those big red bearish engulfing candles, and it starts moving a little bit lower. This is the time to be taking profits on something like this. It just makes sense. And again, that doesn't mean you have to be super bearish AI. You don't have to be super bearish NVIDIA. I think that growth story is still very much intact. But as far as the mechanics of the market are concerned, this is a good time to be profit-taking on SMCI, MU, NVIDIA, these big, huge first-half semiconductor moves. And then we can go back and we can say, okay, we had this big first half of the year where the Mag 7 stocks, most of them, have gone up and really pushed the NASDAQ higher. NVIDIA, your other semiconductors have come along and really pushed tech, and they bullied the market. These have been the big gainers that have made this market go up, up, up for the first 6 months of the year. Now, I think it's time to start thinking about rotation trades. What are people going to be looking at next? This type of performance, although bullish overall for the longer term, it just can't continue like this. We can't have these stocks just gapping up every single day. That's not healthy action. They need to retest. They need to reset. They need to chop along and move sideways. So my thought would be, I think it's perfectly reasonable to say NVIDIA is going to move sideways or down, maybe for the rest of the summer, maybe longer, and then maybe it'll catch higher in the fall. We'll have to see. We'll have to see how people feel about it. But for right now, where's that hot money going to move? And so what I'm looking at are maybe some of the forgotten tech growth trades, maybe some of the Mag 7 stocks that people have left behind by chasing the AI story and names like Microsoft and Meta and Google higher. There's some stocks that haven't been performing so well that are starting to bottom out and shape up and look a lot better. And one of those stocks is Tesla, believe it or not. Now, I know a lot of people are probably bearish Tesla. And I'm going to share my screen right now and show you. This is NVIDIA. This is what we've been talking about right here. We have another one of these bearish engulfing candles right here. And so my guess is we're going to chop along, maybe to retest 100, move sideways right here. But you can see this chart. You can see how powerful this rally has been over the past 6 months and how well it's done. Compare that to Tesla, which looks a lot different. Tesla is down for the year, and not down a little bit. It's down a lot. It's down about 50%. It's been cut in half so far this year. And for good reason. I think there's plenty of really solid bearish arguments to be made against Tesla. The last couple earnings have not been good. The management comments have been strange and not great. I didn't like the whole idea of them going all in on a much cheaper vehicle when the Model 3 is very cheap and EV prices are dropping. The whole luster of EV has definitely worn off in this market. You see some of the more speculative EV stocks have gone bankrupt, or they're close to 99% down from their highs. The whole idea of EVs being the future has been cast aside, especially by the major automakers. We just saw Ford come out the other week saying, we're not going to be developing any more EVs until we can figure out how to make them profitable. We're going to stick to internal combustion. So I think that's the trend that's moving forward right here. And people have a reason to be bearish on Tesla. There was another Cybertruck recall this week. Everybody's bearish on Q2 deliveries, which are supposed to come out next week. Everybody's expecting the worst possible numbers. And like I said, earnings have been poor. Deliveries were bad for Q1. No reason to be bearish or no reason to be bullish on this stock until you start looking at the chart right here. These little E's down here, those are earnings. Right before the last earnings release back here at the end of April, Tesla was falling off a cliff. It had dropped below its April 2023 lows. It was posting new 52-week lows almost every single day leading into that earnings announcement. Earnings weren't that great. The stock pops. It moves up a little bit, and then we have a huge gap higher. It was up 15% on the day the full self-driving approval happened in China. And ever since then, it's been consolidating really nicely here, and it's starting to come out of this ugly downtrend that has been trapping this stock since July, August of 2023. It's been going straight down for quite some time. I mean, it was testing $300 last summer, and it was down all the way to about $142 right after earnings were announced in April. And now you're starting to see it round out in this nice bottom right here. It faked below those 52-week lows and then popped higher right there. This was the washout, I think, for this stock. And with everybody expecting bad news and price showing me something different and people piling into this stock right now, you can see right here, heading into the end of the week, it's up almost 4% today and approaching that $200 mark. I think if it breaks $200, and it'll definitely go up and test that area, that's kind of the round number magnet there. If it breaks $200, I think it's going to complete that bottoming formation there and start pushing higher from there. And this could be kind of a surprise gainer because I think everybody's on the wrong side of this trade. Everybody's thinking bearish deliveries, full self-driving, never going to happen. All these robo-taxi promises, they're all pie in the sky ideas that aren't going to come to fruition. I don't know fundamentally how all that's going to play out, but what I can tell you is I like it when trades shape up where we have the news, analysts, and everyone's opinion on one side, and then price telling us something different. And that's exactly what's happening here. We have a stock where everybody seems to hate it more and more by the day, and yet this chart starts looking better and better, and it's been looking better and better ever since it announced earnings in April.
All right, so I'm intrigued. When you told me that we're going to be talking about Tesla today, I raised my eyebrows. I don't know if you saw that or not, but how far out? So how do you trade this, and how far out do you go if you're planning on using options?
Well, if you're using options, I think you can play this one of two ways. You can look at this as a very short-term trade, and you can say, okay, if this breaks above $200 right here, or I can anticipate a $200 breakout, I can play it over the course of a few weeks and maybe look at some August strikes that are a little bit out of the money if you really want to play something aggressive and speculative. But at the same time, I think that this is lining up on multiple time frames. And when I say that, I mean that whether you're a short-term trader or maybe a longer-term investor or a position trader where you're looking to hold something for several months, not just a few days, I think this is a really good low-risk entry point to try to get into this stock because you have a situation where it's coming up on a nice big round number like $200. If you wait for a breakout above that level and get in and then set a stop somewhere down here in maybe like depending upon how aggressive you want to be in the 190s or the 180s, you don't want to set it right at $200, but give it some wiggle room right there. Then you're at a perfect spot to ride a potential move higher and then not lose too much if it tends to break down right there. So I like this a lot. I like this not only as a quick trade, a play on an unexpected bottom in a hated stock right now, and I also like it as possibly a longer term trade heading into the fall as a full rotation into something like this where once it gets wheels, this could go all the way up and retest something like 260, in a matter of 6, 8, 10 weeks if it really gets momentum.
Well, I love it. This is why we have you on this channel, Greg. You're selling NVIDIA, taking profits on NVIDIA, and moving into Tesla. I love it. That's a great idea. Thanks again for joining me today, Greg. And as always, we'll be sure to keep up with you and what you're doing at the trading desk and your top trades live calls that can be found on this channel every Tuesday at 11 a.m. Eastern Time.